Welcome to Better Credit, Better Home, your source for the latest local and national news that can impact you if you are in the market for real estate. Here are your hosts, the Kingwood mortgage guy, Mike Durr, who uses his 25 years as a mortgage professional to help people improve their credit, and Joe Salas, an accomplished home inspector, real estate agent, and trainer of new agents for Byrd Property International. Together, they will help you understand what you need to know to get the most out of your real estate investment. Let's get started.
Let's get started, Joe.
Let's do it, man. Good to see you. Good to see you at that party last week.
Hey, that was fun. I tell you how much fun it was. Stanley didn't let me drive home. That's how much fun this kid had. And I'm not a drinker, but I should have known that third glass of wine without any food probably took me right over.
Usually happens that way. Usually happens.
Yeah, but it was fun, and that
was good to see you, man. Thanks for coming.
Excellent for me to be at a place like that where all the top producers were there, and that was I've got to work on getting with Bonnie and Jane to get me that list of all the people that were award winners, because I'll be calling them folks.
Yeah, absolutely. I think they're going to actually reach out to you, but offline we'll talk about that.
Okay. So big news this week. Did you hear the big news? Did you? Come on.
I'm not pregnant, so I don't know.
Well, I'm glad to hear that, actually. No, but the big news was, well, let's just put it up here. I'll show you what the big news was. FHA lowers the monthly mortgage insurance by 30 basis points.
No way. Oh, yeah, I did hear that.
This is a big deal for first-time home buyers, and I actually have an example of what this means to somebody that's buying a modest home, $250,000, something like that, the difference it'll make. And what's interesting is that in 2009, it was at this level. It was 0.55. It went from there to 1.35.
Oh, wow.
So they raised it 80 basis points, and it was at 80 basis points more than that from 2009 to, I think it was 2017, something like that, where they lowered it back down to 85. And at 135, it was brutal. I mean, it was not a good thing. But this is fantastic news. And FHA versus conventional, even last week when it was at 85, was more competitive, particularly when you compared the mortgage insurance to FHA and conventional loans. I mean, FHA just always had an advantage. Now they have an unfair advantage.
Almost, right?
Yeah, I mean, it's going to be appealing for conventional people to look at this at some point. Now, I still think the conventional is the better long-term play, but it'll depend on what you're doing with that. I always like to introduce Tim King. We invite Tim King to come hang out with us. He's a local appraiser. He's a friend of mine. He's not here today, but if you ever need an appraisal, you would just call Mr. Tim King, and he would love to help you. And he's just a good guy. And this is
look at that,
Joe Salas hanging out with the big birds, the Jane Byrd and the Bonnie Butler, right there as he receives his award. Now, there were a couple levels of those awards. That was one of the top awards, wasn't it?
Yes, sir. 5 million plus.
There you go, baby. That's awesome. And you look good, man. You just dressed up pretty smart there.
I clean up nice, don't I?
Yeah, that was fun. Okay, what are we going to cover today? Well, I've got this. I didn't change this. I changed all this other stuff, but I didn't change this. So our humor, again, it's 50-50 chance it's funny, but I thought it was hilarious personally. So we'll see about that. FHA makes huge announcement. Case Schiller FHFA Home Appreciation Report. Favorite home buying tip. Oh, my Google thing. Rents up to 3.3%. I can't shout. What should home buyers do? We did that last week. I'm going to do it again. Income and timing. This is a couple of my little stories today. And then area mortgage rates. And it's actually some good news today. So let's get started. All right. So what do you think this is?
I don't know, man. And I don't think I'm old enough to see it.
This is There's some Chinese guy was having a long distance relationship with this woman in a different country,
You
and
don't say.
he created a kissing thingy machine. This has got silicone lips, and it's actually a real deal where they patented it. He charges $40 for this, and there's just I thought it was pretty funny.
We're gonna get booted off of all these platforms for.
Oh my gosh! Oh, your mind's taking me to the gutter. All right. All right. FHA to save new home buyers $800 annually. Well, it's not everybody's going to get $800 annually, but they expect at an average basis that people are going to save about $800 on their mortgage payment. You think that's $75 a month or more. So this press release came out February 22nd, where FHA announces that the 30 basis points reduction from 85 to 55 basis points, and it's estimated that 850,000 borrowers will save that much, that 800 annually. It's gonna. Bottom line is, it's like getting a quarter off the interest rate. Is really what it's like.
Mike, for the uninformed, tell people what mortgage insurance is.
Well, it's funny you asked that, because it says right here, FHA's annual MIP is calculated as a percentage of the outstanding loan balance. And this, I'm going to go through this whole minute if you have any questions. For example, an outstanding loan balance of $200,000 with a 50 basis points annual mortgage insurance premium would yield an annual mortgage insurance premium of about $1,000. So what happens is, when you have a loan that people are putting less than 20% down on the home, that triggers mortgage insurance. That mortgage insurance doesn't cover the borrower, it covers the lender.
There you go.
That is, and that the beauty of that is it allows people to get in homes for a lot less money than 20%, but you have to pay for that insurance that goes to the lender. So lenders typically assess the annual MIP or mortgage insurance premium via 12 equal payments included in the borrower's monthly mortgage payment. The mortgage insurance premium revenues received by FHA offset mortgage insurance claims it pays to lenders, enabling the program to operate without government subsidy. So when you're paying that money, it goes into a fund, and then when somebody forecloses over here, that premium covers that payment to those lenders that agreed to make those things. So it's and FHA is one set of premiums, and at 0.55. Now, what you have to think about is, on the conventional loans, you have the same type of mortgage insurance, but it's based on the credit score and the loan to value. Okay, on the FHA, it's set at one piece. There's no adjustments. You could have a 740 FICO or a 540 FICO. The mortgage insurance would be the same, and that's what separates it. So, did that make sense?
Yep.
Okay. I've got another example I want to kind of talk about that, but this is something that I thought was real. This is a $260,000 sales price. The 0.85 triggers on this particular loan. I guess the loan is 255, 290. So these two are both the same. And in the first case, where it says old here, the premium, the mortgage insurance premium, is $177.72. Same loan, same interest rate, same everything over here, but now instead of the 177.72, it's only 115. So if I do my math right, that's almost $63 less, and that's the equivalent of a quarter to 3/8 of a point. So that just meant the cost for our FHA borrowers has gone down substantially. And if you look at the payment, you can see it too. The monthly payment $23.19 here, and it's $22.56 over here. So it's a big deal. I mean, that's going to help a lot of people, and it offsets the it's not going to totally offset the interest rates that have gone up dramatically, but it helps. Every bit helps.
Every little bit helps. Yep.
That's right. Kind of going back in the right direction. So I put up there why FHA is a great loan program, and rates are very competitive. I mean, usually the FHA rates are at or just a little lower than what the conventional rates are. Debt ratios. When I talk about the debt ratios being broader, what I mean is you can have more debt and still qualify for the same house. And this example over here that I put underneath this house, this is a very nice little house. Let's just say it costs 220. You could qualify for that 220,000 with the same debt ratio. But if you had to go conventional, you'd qualify for about 155. That's a big difference. That's a $65,000 difference in a house that you could buy. Now, don't get me wrong. I'm not trying to push anybody into a more expensive house than they can afford, but the scenario I'm going to paint for you later in the show, you'll see what I'm talking about. Excuse me, I gotta get a drink. No, I did that wrong. You notice that's my Kingwood mortgage guy.
I love those.
All right, so debt ratios are broader. They allow more debt. Credit scores are forgiving down to 550. I've seen some people say they can do them less than that. I haven't ever seen it. Mortgage insurance has gotten even better. That's that announcement that we just made today. Down payment fixed at 3.5% minimum. You can put more money down if you want to. FHA will allow you to buy a substantially more expensive home compared to a conventional loan. Now, some people might say you're teasing people to buy more home than they can qualify for. That's not what I'm saying. But in this particular case, the gal has the income to qualify for 220 FHA. And is it a bigger debt ratio? Yeah, the difference is substantial, but it's just the conventional loans are very strict, I think, are the guidelines. And in this particular case, I had a customer today wanted to buy a $220,000 house. She qualified FHA, but the darn home couldn't go FHA. Joe, why wouldn't the home be able to go FHA?
Condition of the home, but also maybe flood zone. Was it in a flood zone?
It was a flip.
Oh, flip, yeah.
There's that 90-day period where the first 90 days you can't do FHA, you can only do conventional. So that was, and it's it's kind of silly, but the only way that she could buy it was conventional, and it wasn't going to work. Yeah. So very frustrating deal for her, and of course she wanted to buy that house. So 2 months into 2023, what are housing prices doing? I thought this was interesting today. And this is the same slide I used last week. And two of the Case-Shiller and the FHFA didn't have thing for December. They came out this week. The Black Knight and the CoreLogic had December things in there. They had it down 4%. So Case-Shiller reports December prices down 3%. And FHFA reports a little different, up 0.6%. The key part I think that you need to see is that these are very modest adjustments to home prices, to appreciation. And there was a big concern from a lot of people that indicated that they thought that prices were going to fall off the cliff. Well, you and I both know that that's not going to happen. It's not even starting to happen. They did another study with 20 major cities prices. And so they take 20 of the major cities. That would be the West Coast, the Chicagos, the New Yorks, the Dallas, the Houston, I guess whatever. There's 20 cities that they think are kind of bellwether. And when they bottom line is they averaged out to be 2.7% down. But what they did is they took the California big cities out, the LA, San Francisco. I don't know if San Diego was part of it, but they've had the biggest drop just because there's so many people moving out of California. And of course, they were way up too. They were way up from what it was. So that's why the biggest West Coast cities had a big effect on that. So really, what's happening is that the market's kind of holding its own, is what I see. Other big cities similar to Case-Shiller, which is very modest change from last year. Now you can't really tell in January, February, they're not the biggest sales months, and we're kind of at the start of the selling season, which I'm hoping tomorrow starts off with a bang.
Yeah.
One thing they also noted is rents were up 3.3% year over year from last year. Rents have gone down, and I think in the report I had a couple of weeks ago, it depended on if it was a 1, 2, 3, or 4 bedroom. Some were up, some were down.
Yeah, I remember you said that 4 bedrooms were down. I think
that I don't understand that exactly, but maybe just the size of the families that are out there. But anyway, so the bottom line on this slide is it seemed to be holding on. The market's not crashing.
I feel it. Yeah, I agree.
All right. So I saw something on this and it reminded me of my favorite home buying strategy. And you tell me if this is a Joe slide, but home has been on the market, let's say 10 to 14 days. Instead of making a discounted offer, make a full price offer, but ask for 3% of the sales price for closing cost. The mortgage payment's not going to be much different, but you'll have saved $6,000 to $12,000 in cash. That's going to help you either pay for the closing cost or to set you up so you're in much better position to get all the stuff that you need to get that house done. Now, I mean, this is not like new stuff, but there are a lot of people that watch the show that don't know this, and they didn't even know they could do that.
Oh, yeah. Yeah, absolutely. You can do that.
What I'm worried about was 10 to 14 days. Is that too quick?
You're on the cusp of where I would say that as a listing agent, I'm communicating with the seller saying, hey, we haven't gotten an offer yet. And if you submit in that time period, there's a good chance that if the offer is a good offer and you're submitting it at list price and you're asking for that, you're most likely to get it. But any earlier than that, it's kind of still in the market. At 2 weeks, 3 weeks, we're either needing to adjust price if we went in too strong, which hopefully we didn't, or we're needing to look at offers that come in a little bit more seriously if they come in under list price or with concessions.
See, I think there's some psychology too in the giving somebody 100% of their listed price.
Yes.
And they can go to their friends and say, I sold my house at list price. And even though they sold it at 97%.
Yeah, absolutely.
And I think that they can hold their head high and say that. And yeah, we helped the guy out. We needed a little help. But anyway, I just am confident that this will it'll work in this market. Would it have worked 6 months ago?
No. Maybe 6 months ago, but definitely not a year ago when multiple offers were everybody was bidding over.
Yeah, house been on the market for 3 seconds. It was on.
Yes, sir.
All right. This is me advertising Houston and why I like Houston. Houston is #1 market in the U.S. for job creation. Housing and land still very reasonable. Unemployment far below national level. It's a major player in the oil and gas industry. Largest concentration of health care facilities. Cost of living big. 7.9% below the national average. 34.1% below the most populous metros. That's that 20 city thing that we talked about. 30% less to live in this city. That is crazy. And if you wanted to find a place in this city, you'd call Joe Salas at 346-224-4224.
Love you, man. Thanks. Yep. Give me a holler.
Wait till you see this. I got something you'll appreciate this. Kind of tongue-in-cheek stuff, but is timing important when buying? Well, yeah, we talked about this. And this is that window of opportunity. I think that's an important time. The interest rates are down to 6.5%. They were up above this last week, so this is a good time. But it's not going to last long. And I know there are a lot of people out there looking for houses right now, and the housing market has slowed a little bit, and we showed it with that previous report. Inventories had a little bit of an uptick. I mean, this March 1st is kind of the turn button for getting this market going. March is the start of it. Home prices are a little more realistic, less frenzy and competition for homes. Interest rates are still higher than what you want, but they're going to get better. And then I've got this product called Loan Shield that is built to allow people to buy a house at this interest rate and then lower their interest rate later without the pain of the refinance cost. So it's a big deal. So just be aware. I mean, this is a chart we use, but I think it's very valid. And as the rates go down, more people are going to come out, and it's going to be like it was last year, I was afraid. All right, so here's a story. I got a call from this gal, not this particular gal. This isn't her picture, but she was a police officer. She's been a police officer for 11 months. Been on the job 11 months. She has 2 separate side gigs where she works as security at a church and another place. And she made good money. I mean, she made, I think, let's just say a couple $1,000s from each of those side gigs. So she had an extra $4,000 worth of income that she got paid for, 1099s, as a matter of fact. at $27 an hour, that's about $4,800. It's in that range. It's not exactly, but about $4,000 a month. And she went under contract for a property, $319,000. She gets to the close date. Lender wouldn't even accept her phone calls. She had good credit, good FHA credit scores. So what's wrong with this picture? Well, here's the deal. Unfortunately, the lender that approved her for this loan didn't know what they were doing, because when you're a first-time police officer and you've been at your job less than 24 months, 2 years, you don't get credit for any overtime. So she got paid she got the benefit of her income of $48,000. The problem with the 2 side gigs is, to have side gigs, you've got to have them for at least a year, probably 2 years. And she didn't have that. And this probably rookie loan officer took that information and says, oh my gosh, she's qualified. This is great. And then an underwriter came back and said, dude, you didn't pay attention to the guidelines here. And so she is out $4,000 for her earnest money, plus an appraisal. And she just left hanging in the wind.
And inspections, if she had an inspection too.
Well, I think she may have had an inspection. So I mean, this is a rough deal. And
shame on the mortgage provider, and shame on the agent as well.
I think the agent has less culpability on this.
We still have a part in the process of communication with. I mean, if you're in a deal with me, Mike, you get calls from me.
Yeah.
And I'm wanting to know where it is in the process, because part of that contract says time is of the essence, and my fiduciary duty actually is partly to keep track of time for them. So
see, this was a very nice young lady, and I told her, I said, look, you're just in a rough spot. She could qualify for about $155,000 is what she could qualify per day. She had good credit. She had all the things going. She just needs that extra time.
Yeah.
And I made sure that she understood that those side gigs are great, but you got to have them you can't be jumping around to them. They got to be consistent.
Yeah.
Otherwise you can't count them. But anyway, I thought that, and she was a police officer. So I thought it was a good story, kind of thing to explain to people that there's a little subtlety when you're talking about loan guys. You got to get somebody that knows what the heck they're doing. There's a lot of young guys that they just don't know. All right. What should home buyers do now? Well, find out what you can comfortably afford. This poor girl, she got the wrong information, didn't she? Pay attention to how long homes stay on the market. That goes back to that thing about watching them. See, obviously, if you want to buy a home and it goes on the market, go put an offer in on it. I mean, because they're going to be other people's too. But if you're just looking and you see homes that have been 10, 15, 20 days, those can be opportunities for you. Start looking, see what's available and what you like. Here it is, Joe. Find a great real estate agent. That's subliminal.
You're not lying, man. You're not lying.
That's subliminal. See that?
Yeah, that reminds me of that Saturday Night Live skit where I don't know if you remember that, where he would say something after he talked.
Understand you may need to make some concessions and be patient. Be patient. That's a thing. I had another couple that put 2 offers in. They got one accepted. They withdrew that, and then they put another house contract and lost that one. So that was their weekend this weekend.
Wow.
They withdrew from one and got the one that they wanted. They didn't win. All right. If you're selling, find out how much your home is worth. Do you have equity? We'll let Joe Salas help you discover how much your home is worth. Then you can decide what your options are. Joe will do an intensive comparative market analysis for you at 0 charge. And Joe's number is right there on the screen, and he's looking for your call. Today's mortgage rates. This is as good as it's been for a while.
That looks pretty good compared to last week.
Yeah, they were up it's down a quarter from last week. 6.5% today, 6% on the 15-year fix, which this is a standard difference between these two, about a half point. The FHA 6.5, and I also just plugged in the VA is about 6.5 too. Now VA can vary a little bit. Sometimes the VA is less than the FHA too. Anyway, that's our show today. Appreciate you coming, watching, and being here with us. We'd love for you to sign up. I mean, you can. What's the term? We can
subscribe.
Yeah, that's what I was looking
and
for.
Like.
You can
My
like
son
it.
watches all those videos. Like, subscribe, and
subscribe and make a comment. Tell us.
Yeah, there you go. And comment. There you go.
We're full of BS or not, but we'd love to hear from you, and we'll see you next week. Joe, always
right,
good. Talk to you later.
Thanks for having me. See you. Bye.
And I got to do this. Yep.